Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm going to go on with my series about investing in emergent markets with European ETFs. And in this part 2, I'm going to talk about ETFs that invest with a focus on dividends. So emergent markets, you saw this definition before. I think it's a kind of silly definition, but I'm giving it anyways. You can read it, pause the video if you like, but I'm not going to go over it again. The 10 largest ones are of course the BRIC countries and Indonesia, Mexico, Poland, Saudi Arabia, South Korea and Turkey. And of course you have the acronym BRIC, and more where I'm more used is BRICS of course, but the S stands for South Africa, and that's not one of the 10 largest ones. So I always find it kind of strange that they use BRICS the most often, and South Africa isn't even in the top 10 of largest emergent market economies. But in total, you have more than 50 countries that can be called emergent markets. And in these videos that I'm making about the emergent markets ETF, I'm always talking about ETFs that invest in the global emergent markets. So not solely in China or in India, they are always investing in all of them together. Then another important thing, of course, is I found 23 ETFs here in Europe. But if you know of any other European-based ETF that I missed, please let me know in the comment down below. I'm always pleased when I can learn about other ETFs that I missed so far, and then I can include them in future videos that I make. So thank you for making your contribution down below. And the MSCI index, I talked about that one, of course, in the first part. That's almost always the case that I'm going to do that because the MSCI index is almost always the most used index to track most things where you can invest in. And with the emergent markets, that's also the case. And you will also have other indexes. And in this video, I'm going to talk about ETFs that focus on dividends. And always on the last slide, so in the last bit of the video, I'm going to talk about, I am going to give a table with an overview of the performance of the ETFs, of the dividend yield and the total expense ratio. In this video, there are only ETFs with dividends, so I'm able now to just give the order from good to less good, and at the end in the table you will see the same order coming back, so from top to bottom, as I'm going over the ETFs that I mentioned in this video. And then of course the same ground things that you need to know. So all the ETFs distribute their dividends in US dollar. For the ETFs that are noted on the SIX stock exchange, I only took the Swiss franc when it was the only available currency for the ETF, and otherwise when there was also US dollar available, I took the US dollar one. And for the ones that aren't noted on the SIX stock exchange, I took always the one that was on the London Stock Exchange, and also the one that is in the currency of US dollar. And all the performances of the ETFs are in US dollars. So even the ones from the SIX stock exchange that are in the currency Swiss francs, I converted them in just ETF to the US dollar performance, so we can compare them better against each other. So let's start with the first one, and that's the WisdomTree DGSE ETF, and it's the small cap dividend ETF. It has a total expense ratio of 0.54, so immediately you see that the total expense ratio goes up quite huge, so quite big jump from 0.15, 0.22 in the previous video, now 0.54. It's a Swiss franc noted one on the SIX stock exchange with a price of 17.02 right now. It invests in 895 companies and there is only 30 million invested in it. Excuse me. But as you know, every ETF that I find, I'm naming them in my videos, and although only 30 million is invested in it, it's the first one that I mentioned. So in my opinion, it's the best one you can buy with a focus on dividends. It's a sampling ETF, and the performance this past 5 years is up almost 38.5%, so a little bit more than 38%. And it distributes 2 dividends per year. You know, I'm normally not a fan of only two distributions per year. I normally like more quarterly dividends, but in this case, with this performance, it's definitely worth looking at this ETF. It distributes in January and in July, and the dividend yield is 3.35%. So not much higher than in the previous video, I know, but still, it's focused on dividend and there is small cap as well. So the dividends aren't going to be that huge for small caps, but almost 1% extra compared to the ones that I named in my previous video for the emergent market ETFs. And these are the distributions that they made in the past year. So this past year, it's the one from July and from January this year. And you see that here in this case, the distribution also dropped a bit in January compared to last year, but I don't know how it's going to go with the distribution then in July. We have to wait and see for that. Then we have DEM from WisdomTree. So once again, an ETF from WisdomTree. And this one focuses on equity income. The total expense ratio is a bit cheaper, 0.46. It also noted in Swiss francs for 12.70. You can buy a stock of this ETF right now. It invests in 506 companies with 83 million invested in it, and it's a sampling ETF. The 5-year performance, it's 26% right now, so yeah, 12% lower than the previous one from WisdomTree. So small caps really making the difference right now. If you look at the dividends per year, so 2 made every year, and there is a dividend yield of 5.33%. So up till now, the biggest dividend yield that we have. And yeah, once again, you see that there is a drop from this distribution this year in January compared to the one last year. So we have to wait and see what is going to happen with the distribution in July. But yeah, it's 5.33%. That's not bad at all. And the performance, not bad at all as well. So compared to the MSCI index with 10% over 5 years, it's almost triple that, and the previous one was almost 4 times that, so huge differences there. Then we have the LDME, and you know that the LNG ETFs, I like those, and it's the quality equity dividends here. 0.45% is the total expense ratio. Once again, one in Swiss francs. It invests in 417 companies and only 16 million is invested right now in it. And it's a sampling ETF. It's a quite recent one, so 2021, and it started in July. So yeah, the drop of the markets was then due to COVID was then almost over. And in the past year, it performed quite nicely, 13.75% up. So compared to the MSCI index ETFs that we saw, where it was always around 3%, this one performed 10% better, so that's quite nice. It distributes 4 dividends each year in March, June, September, and December, a dividend yield of 3.65%. And these were the distributions that it made in the past year. Then we have the PEHH ETF from Invesco with a total expense ratio of 0.49. And here it's important that we clarify what RAFI means. So RAFI means Research Affiliates Fundamental Index, and that index employs a composite measure of a company's sales, cash flow, book value, and dividends. So there is a focus on dividends, not completely only on dividends, I know, but I took them. I took this ETF in this video because I think it belongs here more than in the one with the MSCI index. Okay, it's or the FTSE index that I made in part one, but yeah, you will see in a few seconds. So this one is in US dollar, and it invests in 397 companies. There is only 29 million invested in this ETF, a fully replicated one, and over the last year, it's almost double the performance of the MSCI index ETFs that we discussed in the previous video. Also, a better performance over the 5 years, and also much better than over the last 3 years than the MSCI index ones. There it was always minus 24%, so a huge difference there. And one of the main rules of Warren Buffett, so rule number one is don't lose money, and in this case they actually did much better than the MSCI index. And rule two is from Buffett, don't forget rule number one. So not losing money is quite important, so then it's important that you don't see a minus here. And if you see a minus, that it is as low as that it is as little as possible. It distributes 4 dividends each year, and once again in the same months as the previous one. The dividend yield is 4.13%, and these were the distributions that it made last year. And then we have the EMHD from Invesco. So total expense ratio 0.49%, and the high dividend, low volatility, they almost always make these kind of ETFs. So with a high dividend, low volatility, also for the European market, they made one. And in this case, they made one derived from the FTSE, they call it as well, FTSE Emergent Market Index. And it's noted in US dollar, and it invests in 98 companies, so it's one of the lowest amounts that we will see in this series. So most of the time it's way up there, but this one only 98 holdings, 166 million invested in it, and it's a fully replicated one. So more or less the same numbers as the previous one, only it performed a little bit better over the past 3 years. And it also distributes 4 dividends per year. The dividend yield is 6.01, so quite nice dividend yield. And these were the distributions that it made in 2023. And then we have the one from the Spider, so State Street, and that's the EMDV ETF with a total expense ratio of 0.55, and it invests in Dividend Aristocrats. So Dividend Aristocrats, that's also a quality name, Aristocrats, of course. So we will see what the performance of this ETF was. So this one invests in only 51 companies. So that's definitely the lowest one that we are going to see. Right now, 97 million is invested in this ETF. It's a fully replicated one. And as you see, again, a little bit worse performance than the previous ETFs. The past year up 6%, and in the last 5 years just actually above break even. And it distributes 2 dividends per year, and it's in February and in August, and the dividend yield is 4.75%. So not as high as the previous one, so there it was 6%, but Aristocrats, they are a bit less exuberant with their dividends, so they watch that they can continue rising the dividend, so they are a bit more careful with their money and distributing it with higher and higher and higher yields. So they want to maintain, of course, their streak of being an aristocrat. So that's why you see the dividend yield is not that high. And these were the distributions that they made in the past year. So on the 2nd of August, 0.3161 US dollar, and on the 1st of February of 2024, so in the beginning of this month, it was 0.3096 US dollar. And then we have the IEDY, or Y, I must say, so IEDY, and that's from BlackRock, the iShares Emerging Markets Dividend UCITS ETF, with a total expense ratio of 0.65%. 0.65%. BlackRock, you need to do better than that. Really, I think it's way too expensive. But some people see iShares, they think it's cheap, but in this case they are being cheated. So it's a total expense ratio that is way too expensive. And then you have the currency on the 6 is Swiss francs. So almost all the ETFs that I mentioned in this video are in Swiss francs. That's important that you be aware of that. So when there is a focus on dividend on the 6, you can always find the ETFs that I mentioned in this video in Swiss francs, and you can't find them in US dollar. So it's always going from Swiss francs to US dollar. And this one invests in 107 companies. There is 534 million invested in it. So you see the previous two, they in fact performed a little bit better. They are a little bit cheaper as well. But this one has a lot more money flowing into it just because it's from BlackRock. So that's why I love making videos like this to let you see all the ETFs. Some people only select iShares, look up emerging markets, they see this one, they see the performance, and the last year it's quite good, but then the past 3 years and the past 5 years it's definitely not good. Also, when you look at the dividend yield, it's nice, but I almost want to call it the dividend trap, this one. So, okay, the past year and especially the past 2.5 years, it performed really okay, this ETF. I'm not going to say anything about it, but in the past, it definitely felt like a dividend trap. So, I'm not a big fan of this ETF. So the IEDY ETF from iShares, I'm really not that keen on it, and then I find it quite astounding that so many people put their money into it and don't look at all the other options that are around. So the distributions of the past year are mentioned here. And then the last one for today, it's the one from Fidelity. So there is even a worse one, I think, than the one from iShares. The total expense ratio is better than the one from iShares. And this one is in US dollar, available on the SIX stock exchange. So that's a positive thing. If you want to invest your US dollars and convert them to US dollars, that's nice to have. But it's also available in Swiss francs. But on the other hand, so 155 companies with 75 million invested in it. Yeah, over the last 3 years, minus 16.37%. Okay, it's better than the MSCI index that had minus 24 over the past 3 years. But yeah, it's actually the worst one with a focus on dividend income. So dividend yield of 3.66%, and it distributes in February, May, August, and November. And these were the distributions that it made in the past year. You see the numbers are low, but if you look at the price, it's only 4.37 US dollar on the SIX stock exchange right now. So yeah, then it's not surprising that you have lower numbers here. In the end, it's always the dividend yield that matters. But let's look at the overview. So if you look at this, you can see that the small cap one with the DGSE from WisdomTree, it outperformed all the other ones with a 5-year performance of 38.29%. It's way up there. But look at those total expense ratios. It's enormously. And okay, you have here the one from BlackRock with 7.91%. Dividend yield quite high. The 1-year performance not too bad. Normally it would be up here a bit with this performance, but the past 3 and 5 years it's underperforming quite big. So, but still, it's better than MSCI index with minus 12% compared to minus 24%. And then you have this one. It has a focus on the environmentally, socially, and what is the G, of course, again. Yeah, I forgot, but I will talk about the ESG ETFs in the next video. And then, of course, you have the pure dividend ETF, so with only focus on distributing the higher dividend yield. So you can see here you have the DEM, the EMHD, and the IEDY ETFs. So those three, from the three with the higher dividend yields, the DEM is definitely outperforming all the other ones. So, and a dividend trap, I didn't dare to put the one from BlackRock there, but yeah, it's mainly due to the fact that the past 2.5 years they really outperformed the other ones here on the bottom. But otherwise, when they wouldn't have had the uprise in the past 2 years, I think I would have called it a dividend trap. And with that being said, I thank you for watching this video. Please consider subscribing to my YouTube channel. Hit that like button as well, the notification, that's optional. You don't need to do that. When you watch my videos, you will get them in your feed anyway. But thank you for watching, and see you on the next video on my YouTube channel. Bye!